Welcome everyone. Welcome to this session of Budget Ki Baat. I have with me Mr. Prateek Agarwal, of course, of Motilal Oswal, and this budget just now finished, and there's so much to unwrap in this. I'll quickly get right to the meat of it. Sir, how do you see the budget's fiscal consolidation map with the fiscal deficit right now being pegged around 4.8% and 4.4 going forward in the next year? Do you think this strikes the right balance between growth and discipline?
It strikes a very good balance. So this was the roadmap that they had suggested last time itself that they would want to adhere to. They are adhering to it. It's a very good news. Bond market should be reacting positively, and if the credibility is there, it may just enable the central bank to at least look at cutting interest rates. Now, it is a very different combo for central banks to cut interest rates just now, with rupee depreciating, with forex levels reducing, and all of that. But still, if the fiscal deficit maths look good, in terms of one variable that our central bank may track, it is a positive one. So chances of us seeing rate cuts over the year increase after this budget, which I think is good for growth asset classes.
Right, absolutely, sir. Sir, the Capex allocation has also been increased to 10.18 lakh crores, and then there is 1.5 lakh crores interest-free loan to states. Do you see this driving a sustained rally in infrastructure and capital goods stocks or any other sectors that may be benefiting from this?
No, so the trick on Capex is to see what has been spent up till December versus what was budgeted. So spent reality up till December versus what was budgeted in the budget. The thing is that the spends are significantly behind budgeted number. So everywhere the revised estimates are significantly lower than the budget estimates. And the new revised estimates, budget estimates for 25-26 are offering a decent increase over the revised estimate. So that is the basically trick. Now here, if they actually achieve the number that they have said, so what they have said is 10.18 they will do in financial 25 and increase it to 11.2. That's a very small increase of just about a lakh crore, so 9-10%. But what is spent up till December is just 6.85. So a very large spend is expected in the January to March period. So I think basis what is spent, maybe there will be a miss here. The increase is not bad, so we stay positive. Now there are subheadings in overall Capex. Railways is flat, as is roadways, but defense is seeing a good nice increase from 1.6 to 1.8. That's a good nice 15% increase. So, and Jal Jeevan, while it is lower than the budget estimates of 72,000 crores, the revised estimates are just about 23,000 crores, so 67,000 crore versus revised of 23,000 crore is a large increase. So, I think there are pockets where one could look for hope on the Capex side, but very clearly the government is saying the Capex next round has to be driven by private sector.
Right, absolutely. Getting a little sector specific, I think government's push for nuclear energy is coming out to be a little clearer with 100 gigawatt target by 2047. And they are also expecting private sector participation in a significant way. So any thoughts on how this would impact the broader energy sector or any capital goods sectors?
So nuclear is a new theme. Okay. While we may have coal as top cap, as time goes by, nuclear should be expected to provide the baseload power. Now, the trouble with nuclear is, as yet, we don't have companies which are focused only on this space, so very difficult to invest. Of any company, nuclear is as yet not a very large part. But yes, if one finds companies with large focus on nuclear, I think that's a theme that one should be very, very focused on. It is not only Indian, it is also global. Happily, SMRs are small nuclear reactors are the thought of the day. Our reactors, which are 200, 250 megawatts, are SMRs. We can even do 60 megawatt reactors. So we have the designs, we have the capability. The thing is to be able to do it in a serial manner and benefit from it. I think the industry will start to focus on businesses where nuclear is a large part to see the delta that can be had.
Right. Speaking of new sectors and new themes, EV got a big news with the exemption of import duties on lithium-ion battery manufacturing equipment. Do you see this accelerating investments into domestic EV supply chains?
Oh yes. So this is again, as per the roadmap set by the government over last few years. So first, let's just put it this way, an automobile gets assembled and then the components start to happen. In the same manner, we started to do panels and then cells and then, the backward integration. Similarly, we did phones and then parts and so on. So that thought continues. So we see no break in that. And I think that helps businesses in the ecosystem. It will also drive capex. PLI part is over, so there is no new PLI, I understand, in the budget. Any which ways it can be done outside, but it has to be there somewhere in the maths. It's not there to my mind as yet. But incentives are there. So if you increase protection, the ability of an Indian entrepreneur to build facilities to supply parts. So they have done it for, let's say, panels. They have done it for, the battery ecosystem. Will get private sector capex.
Right, right. We also saw a proposal to scrap custom duties on key metals like cobalt, lithium, lead, zinc, the waste of these metals. So do you anticipate a re-rating of metal cycling companies because of maybe a structural shift is in the offering, do you think?
So nobody recycles cobalt and all of that. So these are small metals, not amenable for volume plays. But government must have something in their mind. So I really don't know the straight one-line impact of it. But yes, metal recycling is a large global theme. There are players emerging in that theme. Increasingly, the world wants more and more material which is recycled. And across the board, plastics, metals, etc. So it goes in this same way. It feeds into the global thought, that's for sure.
Right. Getting to the big news, of course, the biggest agenda item that everybody was looking forward to was the tax changes. In the new tax regime, there's no tax up to 12 lakhs, and that would lead to more disposable income. Which sectors do you see the demand driving into, and where would be the biggest impact felt, do you think?
Yes, so if we look at the statement from the FM, the population of the country is being given 1 lakh crore extra versus earlier. Okay, now let me say we expect a telecom tariff hike soon enough. That could take away, we don't know the extent of the hike, but 20 to 30,000 crores. Okay, I would say the basic needs, roti, kapda, makan, are very well taken care of. So a lot of what is left could provide some delta demand for durables.
Right.
What is also there in the budget, and it is in the form of incentivization, and I think people are missing it, is real estate. So if you have more money in your pocket, your ability to buy a home increases. The budget has said that now a person can have two homes where he can claim to be living. So second home has been recognized.
Right.
For rentals, rent up to 6 lakhs a year. You don't need to do TDS. So I think housing has a lot to cheer about. This is the same thing. Now, while the government may not have explicitly spent more money, it is incentivizing. My sense is either the extra money in the hands of the people goes some bit into discretionary or housing. So discretionary will obviously include cars and two-wheelers and all of that. So discretionary consumption and housing. The housing should not be missed.
Right. Right, sir. There was another big news for insurance sector as well, with the FDI cap being raised from 74% to 100%. And with this juxtaposed with the recent sell-off we have seen with the FIIs, how do you see this playing out?
So typically my reading is government does these things when some of the foreign guys demand it, otherwise for whom the government is doing it. So we should expect to see some deals happen and some domestic companies becoming foreign. I mean, companies where it is just 25% Indian stake becoming fully foreign possible, but I don't see much implication on listed businesses. Because I will pinch myself if foreigners come in and buy rest of Indian businesses from the market to make it private. So that doesn't seem, that looks like a very long shot to me. Mostly won't happen. And then if people move to the new tax regime, suddenly the tax benefit of insurance would be appealing to a even smaller set of people. So you would buy insurance for need of insurance, not for tax saving. So it's not really overall a great positive for the insurance sector.
Right, right, sir. We also saw the Heal in India initiative being rolled out for medical tourism. How much do you think will this impact our hospitals, diagnostic sector, and other tourism sectors?
It should. In hospitals in around Delhi, in around Hyderabad, some in the east also, there is 15 to 30, depending on which hospital one talks of, influence of people who are coming here for wellness, for medical tourism. If things are made easier for them, it should help, because otherwise, frankly, Dubai was starting to give very, very strong competition for, let's say, richer Middle East customers and African customers. We were really losing out. So one should go to Dubai to see the number of hospitals they have put up to cater to this segment of the society. I think we have to up our game massively there. Around airport cities, so that it's easy to access the hospital infrastructure, and visa-free travel, offer duration that can make a person well, give time to recuperate and all of that. I think will go some way in making India more competitive. So one would have to look at the list of countries which is proposed for making visa-free travel. I suspect a lot of them would be countries from where we get medical tourists in any ways.
Right, right. While the budget was being read out, I think this is a part of every budget. There was always an increased volatility. We saw the markets opened in green, then they went down to a bit of red, then they became flat and then down again. So of course, volatility is always there, but in a broader term, how do you see this budget playing out? How has the market reacted to it, do you think?
So I think one good thing is as yet the budget hasn't presented a secret that the market is discovering and will react negatively. I think we have a day for that. A lot of it will happen tomorrow, and markets on Monday will react. Going into the budget, the thought was, Capex has been the driving engine and all of that. So it will again be focused on Capex. But I think a section of the market understood that monies have not been spent. The Capex spend of the government just became positive last month. That was the last data you got. The whole thought was if you're not able to spend what was allocated, mostly one has to compete the new numbers versus BE. As one goes forward, one would accept that Capex continues to drive the economy. Lot of the money that is being put in the hands of the people, like I said, goes in for increased telecom tariff that one expects, may go in for durables, may go in for housing. Now, durables, cars, etc., may not be taken as a part of Capex, but housing most people take as a part of Capex. So I would say it continues to be driven by Capex. Give it 1 or 2 days more. Defense actually versus what has been spent has seen very decent increase. Roads and roads and railways have not seen an increase, but defense has seen a very good increase. So maybe there 1 or 2 pockets will stop participating. I think those pockets stopped participating even in the past. Defense should do okay. Now in roads also, earlier the government used to spend. Okay, so these were cash contracts, and then we moved to annuities. Now the whole thought with which the government is going ahead is the balance sheet of private sector has been repaired. Now private sector should come forward to take projects on their balance sheet and spend. So the need for the government to allocate more is not there. So as we go forward, one should expect to see more of PPP projects. Not PPP, it is BOT projects. You build, you operate, and you transfer back to the government, where the need for government funding is not there, less there.
Yeah.
So I think that people will understand slowly.
Right. While we discuss quite a few sectors, are there any key themes that maybe we missed out in the discussion that you feel are going to emerge from after this budget?
So every budget, not one budget, every budget tries to do a bit more for a part which is stressed. Okay, and as we went into the budget, people were really stressed about consumption, not picking up and all of that. So if the budget put some more money in the hands of the population, the first time they have done it in a long while, I think consumption as a part of the economy gets a shoulder. Okay, so Capex continues, consumption gets a shoulder. So what happens is your market gets broader. It's not a very narrow market. I think that is the key takeaway, and one should be happy about it.
Right. Absolutely. Before we conclude, any parting advice for our listeners, our viewers out there? What should they must keep in mind now or always?
I just want to take people through what happened over last 1 month. We have seen a large crack in the market. To my mind, what has happened is there was a part, the growth in earnings part, I keep saying, which did very well between September and December. Now, in let's say middle of December to some bit of Jan, we saw global interest rates move up. In the US, Japan increased interest rates, and currencies moved. Rupee moved down by 2-3 versus the dollar. Now, for levered entities who borrow in a foreign currency, like hedge funds in the US dollar or on the yen, suddenly the cost of doing business became very high, and it caused them to cut positions. And you saw the crack in the market that you saw. You map what went up, you map what went down, and it is pretty obvious that this is the key reason because of which the crack happened. Now, if currency markets stabilize, interest rates stabilize, they don't need to drop, they need to stabilize. That's it. People will again start to take positions, and since it is such a short period of time, I think a lot of the same spaces may just come and do well. So that is what it is. I think budget came in, just 2-3 days away from a very sharp correction that one saw, and presents a very good opportunity for investors to come into the market.
Right. Absolutely. Well, that was our time. Thank you so much, Prateek sir, for taking out time for us and lending your insights.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.